Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 13th, 2014. In this video, I wanted to take a look at two commodities that I'm currently bullish on: coal, the U.S. coal stocks, as well as crude oil. I've been talking about coal for a while now, and as of today, I've personally taken a long position in crude oil and added that as an active long trade on the site as well as a setup. So we're going to get to the charts of crude oil and coal in just a minute here. Before we do that, I wanted to talk a little bit on the U.S. dollar because the U.S. dollar, where the U.S. dollar is headed, will most likely or almost certainly determine where coal stocks, and crude oil going. So what I'll do is take a look at the dollar charts. We'll touch on the correlation real quick between the dollar, oil, and coal prices, and then we'll dig into the charts of oil and coal as well as a few coal stocks. So what we're looking at here, this is a weekly chart, a 15-year period with a weekly chart, meaning each candlestick on this chart represents 1 week of price action of the US dollar index. And what I'm focusing on this chart are these overbought readings. Overbought, anytime the RSI crosses above 70 is typically considered overbought on a security. And as we can see here, over the last 15 years, we've only had, 6 different overbought readings in crude oil. I'm sorry, in the US dollar, and currently we're on one of those. In fact, this is the most overbought by far that the dollar index has become in the last 15 years on this measure. You're looking again at a weekly chart, the weekly RSI, and I'd imagine if I went back even further, 2 decades or more, we'll probably see the same thing. So we're extremely overbought, and as I often state, overbought and oversold alone is not a buy and sell signal, nor is it an exact timing indicator. So what we need to do is look at some other, other technicals to see if it's confirming, a likely trend reversal at this point in the dollar, or if we're likely to go higher. In other words, maybe become more overbought, or see the RSI come back in and watch the dollar go on to make new highs, which is always a possibility. And let's just talk about that real quick. Currently we have this single cluster of overbought readings, and sometimes we'll get that. Like back in 2010, we had this overbought reading, and as you can see, the dollar had this very sharp run up, and all of a sudden peaked and immediately reversed hard and retraced all of its gains and then some. So that just happened on a single overbought reading. And if we look back to previous 4 readings on this chart, what we saw were a series of consecutive overbought readings or near overbought readings following the first one. In other words, we had an overbought reading here. Prices went up to make a slightly lower high on the RSI. I shouldn't say prices. The RSI indicator went up to make a lower high, and once again another lower high. So that's a series of lower highs on the RSI against higher highs in prices, i.e. negative divergence. So what I've done here is mark those lines. This was the initial overbought reading. And had somebody exited their dollar position there or gone short the dollar or long dollar sensitive assets, as you can see, they would have had a quick pop, made some money as the dollar came in, but then the dollar moved sharply higher to make another high. And in fact went on, this was almost a year later, to finally make a series of a third high before topping out. Now you can see those long-standing and powerful divergences actually led to this top where the dollar index fell from about 120 all the way down to, well below the $72 level. So divergences like this, especially when confirmed with other indicators or oscillators like the PPO down here, tend to mark lasting tops. But once again, you can at times see very sharp moves and lasting tops off single overbought readings. But at other times, like I have marked here, all these divergent tops, and the divergence was confirmed on the PPO, that's another possibility. So how do we know if this is a lasting top, or if prices are going to go maybe pull back in and go on to make a new high, possibly hit this next resistance zone up here at 92.50, which is certainly a possibility. And if that were the case, then my expectation would be to see the RSI come back in here and push up at some point to make another lower high, putting in a divergent top, and that would likely be a lasting top for the dollar. So the best way to get a feel for it is to zoom down into the daily charts. This is a daily time frame of the US dollar. We're looking at a 2-year chart. And as you can see, we have some very steep divergences also on the daily RSI here. So we have negative divergence in place. We also have negative divergence on the PPO, or I'm sorry, on the MACD we're looking at here. I prefer the MACD on a daily time frame. So we do have what appears to be indications or warnings. These are momentum oscillators, and they're warning that the momentum is waning, and it warns of a likely pullback or correction. Let's just take a look, at the previous divergent high. This is back in 2013. So last year, what we had here, we had the first overbought reading on the RSI all the way back in, it looks like around March or so. Prices became overbought. And what happened is we pulled back as expected. Usually when the RSI gets that far ahead of itself, you see a pullback. So there was a little correction. Then prices went on to push up. The dollar index made a new high. At that point right here, the RSI made a lower high, i.e. negative divergence. We also had, although it's not drawn out here, if I took a line from this point to the previous reaction high, we also have negative divergence on the MACD. So at that point, although this didn't prove to be the final high for the dollar, that came just a few months later, we had one heck of a correction. So had you positioned long or at least been on the lookout for a trend reversal, you would have had your move if you got in quick enough, because the dollar had a very sharp pullback. The next reaction to the highs was equally as strong, but with that being said, we could see something similar here, maybe a sharp pullback. Prices possibly go on to push up and make a new high again, similar to what we did here. But with that being said, this was a tradable correction, even though it wasn't the top in the dollar. Now, had you gotten short and stayed short at that next high, well, as you can see, that marked pretty much a bear market in the dollar, quite the correction that went on until the May lows here. So either way, point is we now have what looks to be overbought readings of potential trend reversal on the weekly, longer term time frames. And zooming in here to the dollar index on a daily time frame, we also have clear, unmistakable negative divergences, very steep divergences. If you look at the slope of this trend line here, from the prior reaction high to the current highs in the dollar against the downsloping RSI and MACD making the higher high, what I want to see is this MACD line continue to curl down and get a bearish crossover in the MACD. That would help confirm that divergence. And the very least, I'd be looking for a pullback. And that's why with the USO trade that I put out there today, I'm focusing right now primarily on the shorter term, the intraday charts. I used a 120-minute or 2-hour chart, listed 4 near-term targets, which I think are likely to be hit. And I stated, and I continue to maintain, that trade, this current trade, has a possibility to morph into a longer term trade should this prove to be a lasting top in the dollar. However, we just don't know that. And I could almost flip a coin and say, the dollar's due to peak out soon, or it may go on to push up to one more marginal new high after a pullback. So again, that's trading. So I'll trade these. I'll be watching the shorter term charts, the intraday charts, and the daily chart for any clues as to, once we start to get a pullback, will that be it? Or does it look like we might have one more thrust up? Okay, enough on the dollar. Okay, why did I spend so much time on the dollar if I've planned to talk about crude oil and coal stocks in this video? It's all about correlations. And, if I'm going to be right on one, I'll be right on the other. And if I'm wrong on one, I'll most likely be right on the other, meaning my dollar call proves to be wrong. My call on a reversal on crude oil and the coal stocks will also prove to be wrong. Let's take a look at this. Let's make a comparison. What we're looking at here is a 10-year weekly chart of USO. For those of you not familiar, USO is the tracking ETF for West Texas Intermediate crude and related products, heating oil. They have different various crude-related products in there. And what I've overlaid is a chart of UDN. Now, UDN is the inverse ETF for the US dollar. So it's a little easier when you're looking at correlations, especially inverse correlations where one asset goes up, the other goes down. I like to flip them around. It's just easier on the eyes and easier visual. And what we're looking at here, don't pay so much attention to the the disparity or the disconnect between prices. Look at the direction. In other words, uh, the green and red candlestick bars are the price of USO, i.e. crude oil. And as you can see, this white line here is the dollar index reversed. So when the dollar bottoms, in other words, the UDN tops, so does crude, and vice versa. So as you can see there, we bottom here, crude goes up. I mean, that's self-explanatory. You can even look at all these little peaks here. Yeah, the prices, because remember, these prices are not on the same axes. That's why these lines are not overlaid directly. So, in other words, the price of USO is different from the price of UDN. And the percentage moves are going to be different as well. But it's the direction of the move that we're looking for. So if we can call a bottom or a top in one, we're most likely going to be able to call a bottom and top in the other. Now, I'm not trying to call bottoms and tops. I'm trying to look at evidence, because if I could make a bullish case for crude oil, but I can't make a bearish case for the dollar, then all of a sudden I don't have a lot of evidence for that trade. My case isn't very strong, and I might second guess it. So that's why I just wanted to point out the tight correlation here, as you can see, and why I leave UDN up. The white line will stay up. This is coal. Now keep in mind, the coal ETF doesn't hold coal. The actual physical coal. It holds coal-related companies, and they're not just coal mining stocks. There's some railroads and other coal-related industries in their companies. However, of course, they're going to move up and down in line, just like the gold mining stocks move up and down with the price of gold. And you can see here, same story. The relationship, I kept UDN up. It's highly inversely correlated, or in this chart, correlated, because I flipped the dollar upside down. You can see all the reversals. Even here, it looks like a big disconnect. The dollar topped, or I should say bottomed, topped over here. And of course, you can see the reversal in coal. So there's a correlation, lest there be any doubt between where the U.S. dollar goes and where these two energy stocks. And then finally, let's just take a look at coal. Oops, I'm sorry. Oil. This is USO, and I'll go back and do a comparison to coal stocks. So let's just change that over to KOL. Again, coal industry. And I mentioned earlier, how close these are, because these are substitute products. A lot of power plants can burn coal or oil. And they'll use whichever one's cheaper. So the prices tend to move together. And there are temporary disconnects, as we have right now. But if you look here, look at the major inflection points in both. Now the white line is coal, the ETF KOL. And I have some other charts that'll compare the actual coal prices directly to USO. But you can see the major peaks come together and the major troughs come together. Lately, there's been a disconnect, and that's why the coal stocks have been rallying very sharply lately. Oil's been dropping, as have the energy, the oil stocks like ExxonMobil, Chevron. However, coal has had a nice run up lately in the short term, and some of those stocks, as I pointed out yesterday, are up, over 100% in the last month. So. Okay, for those of you in any of the coal stock trades or following the sector, this is a 3-month chart of actual thermal coal prices. This is per short ton coal prices right here. And as you can see, we've had this nice move up lately. We bottomed, looks to be, around the end of September. So we made a slightly new low here in around the end of October, but lately prices have been moving up sharply. So we made this lower low, and we've had this nice, gain. Nothing huge, but that little pop has led to a tremendous rally in a lot of the coal stocks, especially the ones that I've highlighted recently. They've had tremendous gains, and that is because that sector is about as sold out as I've ever seen. I've been reading bearish headlines on coal stocks for years now. We all have, about how dirty it is, the pollutant. These coal companies have been taken on the chin. So there's a sector at some point, I don't believe the sector is going to go away. And if you do believe there won't be any coal companies left in the United States, within a year or two, then don't trade these stocks. I happen to believe they'll be here to stay. Sure, there might be some that go away. There might be some consolidation. But with that being said, and we're going to look at some of the charts here, coal, especially if the price of coal has bottomed, there's going to be a tremendous amount of upside on these stocks. So I just want to point out here in the short term that's we've seen this little bounce. Here's a quick look at what is this? I believe a 10-year chart on coal prices. And if you look at this, it looks like we have some nice support here around the $40 level. This was back in 2004. $40 per ton, came back to the $40 level right around there. We're not too far above there, so it's possible we go back down to the 40 level, sure. But we've seen a reversal now, and again, as I illustrated, it's more about what the dollar does from here. And if dollar reverses and heads lower, more than likely we're going to see coal and crude prices go back up. This is the same chart of coal prices, once again in orange here, overlaid with crude oil in blue, just to show you the very tight correlation that I mentioned before. One goes up, the other goes up, one goes down, the other goes down. There's been a slight disconnect lately. Over periods of weeks, months, you'll have some disconnects, but over time, these are very highly correlated assets, coal and the alternative energy source, crude oil. I just wanted to back up real quick also on the dollar. This is something I'd talked about in the past. In fact, I guess on October 1st, it looks like I posted this chart here. This is a euro, and remember the dollar is in itself, when we talk about what the dollar's up, the dollar's down, that's just relative to other currencies. So the dollar index is a compilation of various currencies around the world, and the euro by far has the largest weighting. I mentioned it's a 57.6 weighting. So when you look at the US dollar index, 57.5% of the returns of that index are attributed solely to the euro. So, if you get a good idea where the euro's going, you're going to know where the dollar's going. So I had pointed this out. We have these rare, what is this, a 10-year, this is a 10-year chart. And over the last decade, we've only seen the dollar oversold 3 times, deep into the oversold territory, below the 30 weekly RSI. That happened back here in 2008, and you can see that move, a massive sharp rally in the dollar immediately following that oversold reading. That happened again in 2010. Once again, immediately following the deeply oversold reading, we saw there were no double bottom or divergence. And once again, we're actually more oversold now than we were on those 2 previous occasions. So this again is a case for a likely trend reversal in the dollar. I didn't circle this low here. Also hit. We were right about there. There was an oversold reading. It didn't cross below the 30 level, but you can see when the RSI gets down around these levels, that's when you're on the lookout for a trend reversal. And so we also have, as I've shown here, the euro is in this large, almost triangle shaped pattern. We have this trend line with 1, 2, 3, possibly 4 tags. So I have this as a support line. And back, a few weeks ago on October 1st, I said at best I thought the euro has about 2.5% downside. I believe we're right here at that reaction low. It had a little bounce. The dollar went higher. Now the euro's come down a little bit, and at this point, that line comes in around 122 on the euro, and we're at 124.74. So we have about another percent and a half downside till we hit this trend line. So, whether we reverse shy of it or not, that's about the downside I see in the euro, which translate, i.e., in other words, upside in the dollar, because when the euro bottoms, the dollar tops, and vice versa. Okay, and back on early October when I mentioned the euro, I also mentioned the second largest weighting in the dollar index at 13.6% is the yen. So combined, the yen and the dollar, the yen and the euro represent the bulk of the dollar index, the currencies trading against the dollar. And, we look at the yen, and this to me looks like the yen has been in free fall. We all know what they're doing over there in Japan with their new round of stimulus, killing the yen. But I'm a believer that the markets are going to correct themselves. The dollar, we're not going to let the dollar strengthen too much because that's going to start hurting overseas exports. In whatever way you want to talk about it fundamentally and rationalize it, these are the charts. So forget about what your thoughts are on the dollar, what they are on the yen. The facts are, from a technical perspective, we have very strong bullish divergences, as shown here on the RSI, and potentially bullish divergences here on the PPO, which again works similar to the MACD. Now we do need to see this PPO line come back up, start turning up, and put in a higher low versus this low back here. That'll help confirm this divergence. What I've done, I've drawn this trend line a little lower. It'll take a while for that to curl up. But if we look at the yen, it's in free fall. And it's coming up on some very good support down here, around coming in around the 82.50 to $82 area. So maybe a little more downside on the yen, but it's so deeply oversold. And once again, we put in this higher low on the RSI, and we have this potentially divergent low here. I think we could see an explosion to the upside once the yen finally does bottom. We're going to see some short covering like you haven't seen, and a quick reversal that could come now, or it could come a few percentage points lower. But either way, the case has been made for a reversal in the dollar and the yen and the euro. Okay, now let's dig in to the chart of crude oil. This is West Texas Intermediate light crude oil. We're looking at a daily chart. I'll get to coal stocks next. I will say that right now, of the two, crude is my preferred. I have the coal stocks just recently coming up to some resistance. Personally took some profits on some of my WLT. I'm holding that as long term. I have several other coal stocks too. I'm holding as long term trades, but I'll get to the coal stocks in a minute. But right now, in the near term, I am more bullish of the two on crude oil. And let's take a look at what we see here. This again is a daily chart. This chart just speaks volumes to me. I've posted this chart before. Simply let's look down below. As I say here, overbought readings and oversold readings on the daily RSI typically precede or accompany major tops and bottoms in crude oil. It is really that simple. Again, are these standalone sell signals and buy signals? No. But if we look at those, just take a look. Pause this video if you want. Draw a horizontal line, even if they're just for trades. I don't have the arrows up here, but you can put a horizontal line or just look up and you'll see that, that first red arrow, we had that correction there. Here's a green arrow here. I need to update this chart actually. Some of the charts cut off to the left. These continue on. But as you can see, a lot of these tops came with these, what I call a double tap pattern. Double tap meaning two consecutive RSI readings. Typically, when they're overbought, you typically have a lower high. When they're oversold, you typically have a lower low, and that creates this divergence. Great if you can get it. However, sometimes you have these single readings that just come up and mark tops. But either way, take a look at the arrows, replicate this chart on your own. Most importantly, right now we have a divergent bottom. We have this double tap. We have a series of higher lows in the RSI right now, as prices also fall to a key resistance level. I have these two green lines. They're auto support resistance lines. So this is a nice support zone. You can see these previous reaction lows here back in 2011, 2012. Okay, I just paused the video to extend the chart a little bit longer to show these other reaction lows and the reversals here that came. So either the way, that's what we're looking at. Plain and simple, as I stated on the post when I put up USO today, I showed a weekly chart and a 120-minute chart, and I'm simply going long at support. This is trading 101. I try not to make it too complicated. This is a security that has fallen tremendously, crude oil prices. And yes, I read the headlines. Yes, I read about the Saudis pumping out oil in spite of the cartels and doing this and that and the other. That news, by the time you hear it, to me is old news. It's the charts speak a lot louder than anything you're going to hear on TV or read about it. So either way, this is what I'm doing, going long at support, and I'm not going long for the sake of going long on a security in free fall. Again, I use the shorter term charts, in this case the 60-minute and the 120-minute charts, to confirm we have that bullish falling wedge. A case has been made. There may be a little more downside in the dollar, and if so, we will probably see a little bit of overshoot on crude oil prices, and I'm fully prepared for that. We'll get to the 60 or 120-minute chart in a minute. So again, positive divergence on the RSI, a positive divergence. It's not very large, but yet it is divergence here on the MACD as well. So, divergent low at support after a security is very oversold. I'll go long 10 times 10 out of that, and maybe 2 out of 10 I'll get stopped out, if this goes much lower. But as of now, as I said, I'm prepared to take a little overshoot. I'm scaling it. I took an initial lot today, primarily looking at the short-term targets. And if the charts continue to develop the way I think they will, this has a potential to morph into a longer-term trade. So that's crude oil. And this is USO, the weekly chart, same chart that I posted today on the static post going long USO. Very simple. It's 10-year history. Every single incidence of an overbought reading has resulted in major reversals. I posted the statistics, and you can simply, grab, if I can grab this here, whatever it is, that one's 90 something. I didn't grab the bottom. That was over 100% return, I believe. And all these rallies were at least, I think the shortest was 30 something percent or so. And, if history repeats itself, we're looking at a nice pop. Now, this is also a very large base. This is a multi-year base. I mean, in fact, this goes all the way back to the Great Recession, the financial meltdown, and oil has been in this trading range since then. So sooner or later, it's going to break to the upside. I mean, back here, everybody was crying peak oil going to $500 to $1,000 a barrel, blah, blah, blah. Yeah, those peak oil people have kind of laid off. They realize there's, a lot of oil in the ground. But I do believe there are more and more people. And over time, the, yeah, there are some deflationary forces going on right now, but they're printing money like crazy. Oil's priced in US dollars. And if I had to bet, I would say over time, this base is going to break to the upside. And that's why I'm saying this can have this trade has the potential to morph into a much longer term trade, especially if we see an impulsive move up here. And ultimately, if we break above this large base right here. But for now, first things first, and those first things are looking at this 120-minute chart that I posted today. Let me move that blue line down here. If you look to the right of the screen, here's where we are right now. USO's at 28.39, and these are the target levels that I posted earlier. If we get up to the fourth target level, which I think is doable, that's about a 19% return. So as far as stops go, I will come up with some exact levels. I really have to study these charts a little deeper. I wanted to get this trade out early today as soon as I did it. A 19% upside, almost 20% upside, you can easily take a 5% downside on that and still have, nearly a 4-to-1 RR on the trade. Bullish divergences in place. Again, I tried to rush that post out this morning. Earlier I had drawn a scenario and I tried to clean up the chart. I'd love to see a tag, and now we have a tag of the bottom of this wedge. So there it is. Positive divergences in place. I'd love to see this MACD curl up. Even if we overshoot that slightly, we can extend this line down and still have a bullish falling wedge. It doesn't have to exactly touch this point here. So there's a little downside left, and as I mentioned, a little upside left on the dollar. But either way, this looks pretty promising, this trade. So, all right, let's go ahead and look at coal stocks real quick. I'll just touch on coal real quick. There's something, I've taken quite a bit of time off lately, and I should have posted this earlier. This was the base. If you remember, I was, bullish on coal stocks a while back, and they fell through support. I was buying those down here and got stopped out and took some losses on quite a few of them. But this was a base that I pointed out in coal stocks, and we're going to look at it on another similar chart. And once we broke below this base right here, we had the lows back in 2013, early 2014. We broke that support, had this, looks to me like a capitulatory move, a lot of quick selling, and we've snapped back up. And the other day, we hit that perfectly, that base, that support line, or now resistance line. And so this is now why I'm a little bit colder in the near term on the coal stocks, because they've had this tremendous run up and they've hit this, the group has hit this, what's now a resistance level from below. I still see some bullish developments in the sector, as I've been talking about. I'm making a bullish case for coal prices and crude oil, but might be a little work to be done here in the near term, and that's why I'm a little more near term bullish on crude prices than I am on coal. This is another thing to note here. The MACD, a lot of times I'll notice on certain securities, the MACD, the zero line, acts as support and resistance. If you look at the trends, when the MACD crossed below, we were in a downtrend in coal. We tried to challenge that. The MACD tried to come up. The zero line, is this white dotted line, failed, came back up. We finally broke above around right here, and we had a little, coal stocks were up for a while. They didn't go very far, but they didn't continue to drop, and they failed to go anywhere from there. The MACD dropped below the zero line, downtrend. Crossed above the zero line, uptrend. stayed and came back tested, remained in an uptrend until once again it fell below. So this is something else I'll be watching for. A solid cross, both lines, a slow and the fast line, to cross back above this level. Obviously, I want to see prices get above this horizontal resistance line, call it 1725-ish, somewhere in that area. And once we do that, that will be back in that base, and I believe we'll probably see a lot of short covering. And again, this trade goes hand in hand with the dollar and oil, so I have to take that all into account. Okay, and finally, I'll wrap it up with this chart. I'm trying to keep these videos as short as possible, and I was going to touch on a few of the individual coal stocks. I'll do that under separate posts. I'll update each individual coal stock that I'm following and or that are active trades on the site. But to wrap this up, we'll look. This is the Dow Jones U.S. Coal Index, so similar to the KOL ETF. This is a chart I've also posted recently. Here's a 10-year chart. So we're looking at a 10-year weekly chart. And as the notation down here on the RSI says, without fail, every oversold or near oversold. I had one case where we just fell shy of the 30 level here, but I put the rest of the green arrows indicate an oversold reading where the RSI crossed below 30. And in every case, we've seen significant rallies. You can just take the green arrow and look, that's a huge move. Keep in mind, look at this scale over here. This is a log scale setting. If I switch this to a linear scale, it would look a lot higher. So we've had some huge swings in the last 10 years in the coal sector. This was a tremendous rally. This was a tremendous rally from bottom, again, marked where we were oversold, to top. This one didn't last very long, but if you put it in percentage terms, the index went from 200 to, goodness, about 325. And that's a pretty decent move percentage-wise. Again, we had another nice move there and there. And here we are. Once again, we have another oversold reading. So if this doesn't play out for a decent rally, then it will be the first time in the past decade that an oversold reading did not pan out. Now, again, these aren't standalone buy and sell signals, although the track record's been pretty impressive. What I've noted here on the PPO, we have some nice divergence, bullish divergence. The PPO making a series of higher lows versus prices making 1, 2, 3, a series of lower lows. This is sort of almost a wedge type pattern. We may need to work around within this wedge more. Ultimately, if and when we break above this downtrend line, that's going to be a buy signal. This is also horizontal resistance. I know we just tagged it on the coal. I had a similar line on the coal ETF that we just looked at. And on the Dow Jones U.S. Coal Index, it's a little bit higher. So this is a horizontal resistance level that we need to take out at around the 125 level. Once again, the reason I'm a little lukewarm right now, we've had a heck of a move up. Coal has led the, coal prices. At least that's nice to see that, this rally wasn't just a dead cat bounce, or could prove to be, but so far it was, accompanied by a move up in coal, the actual price of the commodity coal. So let's just watch and see. Let's get above this 125 level. That will be the next buy signal. And if and when we take out this downtrend line, these are potential longer-term upside targets for the sector. Okay, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed.